you could make your comment. You saw the questions from that I gave you 2 days ago, the questions on derivatives. Do you still have them?
I don't know. Why don't you repeat them for me?
Yeah, let me go there. And so what they were, what they were looking for, what they were looking for was we have, the NSE has a rich history, but we still seem to not have the kind of products and even the growth of the market access of these products in the Kenyan space. That's to say that we have derivatives, but very few people venture in. And even in vanilla products like equity investments or any such, products, we don't have a lot of Kenyans going into the stock exchange to invest. Instead, what we have is people buying Kaploti somewhere, and unfortunately, there are so many of us doing that, and all these skyscrapers coming up for those with a bit more money, and it seems we are not challenging ourselves in, diversifying our pool of investment products. What's your view on that? And then I'll ask John to comment on the same.
I think that's a very familiar question. And by the way, John, well done. I think you've explained why people should invest in stock markets, and look at 12.5% ROE, and you've done very well. So I think I want to congratulate you there. Irene, I think we've been in this market for 67 years, and I can tell you, we have educated, we have talked, we have sensitized. Kenyan investment psychology is not easy to change. We are a brick and mortar and land society that has just now has to learn the harsh lessons that illiquidity of assets is a real thing. Now, I mean, for the first time, we've seen a real correction in property. As John was saying, these things were 30%. You tell anybody about stocks, they'll tell you, hey, I can make that in land in Athi River, Kitengela. But now there's a stark reality that this asset class is not just as attractive as it looks like. There are serious risks that sit in there. Let me tell you, this market, if you look at it today, we are now at a market cap of about 2.8 trillion shillings. Our index is up over 2,000 points, but in that process, look at how the bank stocks have appreciated just in the last 2 months. I mean, stocks that were trading at 35 and now at 60 shillings, 40 shillings, and 50 shillings. How much wealth has been created? Who is looking at this wealth? Institutional investors and international investors. They have taken advantage of this market. I mean, Kenyans are what I call they basically a reactive investment society. They're not proactive. I mean, Safaricom started way down at 11. Today it's at 43. I mean, we've seen it trailing up. We educated, we talked about it. The banks, we spoke about banks making heavy provisions in 2020, and it was obviously going to be a recovery period in 2021. But this information is just not settling in. So we are trying a lot. Just recently, we launched a product called Bonga Points for shares, because Kenyans were saying, oh, we don't have money. Now you can redeem your Bonga Points and buy shares. So that's how we intend to shore up the retail. Now, the retail investors in Kenya have historically been IPO investors. So in the absence of a large IPO, we've not seen that excitement coming through. We've had our own challenges in getting IPOs in. It's not been easy. There have been internal and external factors, but the journey still continues, and we continue trying. But really, the market is really trading and has created great opportunity for people. The valuations are going up. I mean, there are gaps. As John said, look at the opportunities. I mean, there are gaps there. 2023, after we are done with all these elections, we'll all be reeling and saying, we saw that number there. And it has happened. We have backtested every election. There's always an opportunity pre-election year, and post-election year is really a recovery and strong growth. So mine is to encourage people, diversify your investment options. Start today. We have put options for you there. There's Bonga Points you can redeem. You don't need lump sums to do that. We have got platforms Our brokers have got mobile platforms, have got online platforms. Access is available. We have got simulations. And if you're really struggling, just go to our website or go to our app, and all the information is available. So it's a leap of faith, and and just taking the next step for that to happen. And John is a testimony. The bank has done very well, and he's speaking about it. And he talked about 12.5% return. This is good information for you today. Thank you.
And John, along the same line, then Jeff says that as far as they can, they've tried to educate people. So is our focus not in the right segment? And by that I mean, are we educating people that already get it? Are we not starting low enough, maybe in primary school, or because there's just a clique, so to speak, of people that invest at the NSE, but the vast majority consider it not for them. So what's your view? How do we change that?
Well, I think Jeff has really done a great job, and his team educating us on the stock market. And but as he says, we went through a period where land prices, real or imagined, were skyrocketing, and obviously we all went there. We have seen it elsewhere. It's not just Kenya. I mean, in America during the great housing market up to 2007, that's what people are doing: take money out of the stock market and invest in property. So it does happen. However, I think in Kenya we do have a number of challenges. One is that even though our banked population is about 86%, it sounds very high. But if you look at the majority of those, they would actually be on M-Shwari and mobile money side of banking. They will not be on the mainstream banking. Mainstream banking remains very small. And so if that is small, then the market that we will then know about stock market, or not know, but knows how to go about getting to the stock market, is even smaller. So it's a small market that we are addressing. But I think for that market, what Jeff says is absolutely the case, that until they see that the liquidity in the stock market is always there, until they go through this cycle that we're going through, they will not realize how important it is to diversify your investment. I am not saying that you don't invest in land and you don't invest in property or other things. All I'm saying is the liquid amount you want to hold, I think the one area I would recommend putting it in today is in the securities exchange. I would further say that, as Jeff says, we've done the same studies that show that, during a crisis like we're in today, which is a health crisis, which even worse is a year before election. This is what Warren Buffett was talking about. This is when people are afraid. This is the time to jump in. So I would certainly encourage people to look into the securities exchange.
And so, Jeff, along the same line then, to expand our selection of equities that we can invest in, how is listing coming along? Why aren't companies that you would expect to be listed there? And are we bringing along the companies so that they feel confident enough that listing is not just for the benefit of the investors, but for the companies as well?
Okay. One of the things I can say about listings is that we have definitely gone through a lean period of time. For a long time, the markets have been depressed. So companies are unable to get the right valuations when they want to bring their companies to the market. That's been a big challenge. We've had competing options of funding. So they're able to get options where they're able to convert into, get that money into their companies quicker. There's always been an anxiety, especially among family-owned businesses considering to come to the market, and that's been a big challenge. So what have we done? We have developed new ways of doing this. We've set up a platform called Ibuka, which is an academy that allows companies, especially family-owned businesses, SMEs, and startups, come in and learn how the process or the journey towards becoming a listing starts, right from the very basics. So we corporatize you, we then put you at an accelerator that helps you raise money, and then we eventually list you. We come up with an alternative platform called an quoted securities platform, which is for private listings. So you don't have to necessarily be ready to go public, but you're able to have your shares trading over the counter in a private market. That's another option. So we've actually strengthened the pipeline to really build that. We think we're going to actualize these in a couple of, maybe this or next year. You'll see quite some companies coming through the market. We also hope to get some direct listings coming through. In the course of the last 5 years, we've also had regional listings like Bank of Kigali, which today is the best performing stock in the exchange. It is really appreciated. And so we'll continue knocking on those doors, including the government, to get us an IPO in. Now, is this peculiar to us? No. Listing is a big challenge across the continent. The last 1 year has been very difficult. But we've really set up platforms to do that. So while we are still building the listing journey and the process, we have alternative platforms which we have created. We have set up a derivatives market. So you have an option of going to the derivatives market. The only market second to Johannesburg, it's Kenya. So you can diversify into that. We have got a real estate market. We've got an ETF market. So a wide area of products are available for you to explore. And they're all generating returns. That's what I can say. I saw a quick question on intraday trading. We are working on introducing day trading. And that's probably going to happen the last quarter of this year. So you'll be able to buy a position in the morning and exit that position the same day. Again, that's going to help create momentum. So the listing overhang, I can promise you, is something we'll have to we'll achieve. We'll be able to exit at some point. But in the meantime, there are very many other options. That's all I can say.
All right, thanks, Jeff. And to help switch gears a bit before we get back to the serious stuff.
John, by the way, sorry, a quick one. The NCBA was a reverse listing as well. So I got a score there, John. Thank you very much. Because he brought in CBA that was not listed, but now by that merger, they're listed now. Thank you.
Absolutely, Jeff.
John, somebody's asking, while we wait to get back to the serious stuff, how do you deal with family members that ask for money? How do you help without enabling delinquency?
Well, that's a tough question. I need to look at the list to see whether I know family members are dialed in, so I'm careful what I say. Okay. Well, look, I think I read somewhere someone joked that when they were young, they used to really complain about their uncle who would never answer the phone. Now that they're grown up, they understand exactly why their uncle did not answer the phone. So I'm probably one of those. Yes, you will have family members asking for money, that's for sure. And I say that we are very privileged to be in a position where you're being asked for money. First of all, you should be very thankful if you're being asked for money because it means you probably have it. So that's a blessing. The difficulty of that, obviously, is that you find yourself getting a lot of phone calls, often at the wrong time, asking for money. So what I've done more recently is to structure that. So I've gone to family members, I've said, do you have a bank account? Give me a bank account. And I've formed what I call a family foundation where I just, every month I send some money. It's never enough. I mean, it's very little. But I hope through that I can at least settle some of the phone calls. But I'll be honest with you, one thing that I did, which I shouldn't really share too widely, is that I refuse to get M-Pesa. So I have no M-Pesa on my phone. And people often ask me, how don't you have M-Pesa? Yeah. But you see, I'm one of those who cannot lie. So when somebody calls me for money and tell me, please M-Pesa me just 1,000, I tell them very confidently, I don't have M-Pesa, and I'm not lying. And it works for me. So I'm not giving you a trick. I'm not saying don't support M-Pesa because they are partners and we work together very well. But that's a trick that I managed to employ. It has worked well for me.
Wow. Okay. Some of us are listening. We might just copy your strategy. And so Mike Hopkins has a question. If you could just ask the question quickly so that.
Asking me to ask a question quickly.
Yes, yes.
Let's see what I can do.
Come on, Hopkins, get on with it.
Oh, look, these Eldon people are so damn smart. That's the problem.
Come on, come on.
I just want to make a comment about predictions. You know, the old adage, it's tough to make predictions, especially about the future. That was Yogi Berra. And as you talk about investment and so on, all of it is actually looking towards the future, and it's pretty difficult. So I'd be interested to know how John handles that in his investment portfolio. My one try on the Kenyan Stock Exchange was to create a fund. I call it the handshake fund, actually. I'd probably be shot doing that these days, but still. And I actually selected the best stocks in terms of corporate responsibility and sustainability. And on the basis of that, I invested a certain amount. And now 3 years later, absolutely wonderful. I've only lost 30%. So my question is, big push these days on ESG, they call it. I mean, all sorts of labels for it. Economic, social, and governance. Financial Times having a big article on that a couple of days ago. And I wondered how that's being handled both in your bank. And as I see Jeffrey there, perhaps he could also let us know a little bit on that. Jeffrey and I, and with Mike a year or so ago, were talking a lot about the issue of sustainability. So I'd be very interested to know what Jeffrey and John think about ESG and where that's going to go. And then the last point is actually totally different on the question of cyber ethics. Somebody, Rupert Limpton, asked a question on artificial intelligence. And sorry, just that. And we run a seminar out of Geneva in one of my groups on cyber ethics. And one thing that came out on artificial intelligence was that artificial intelligence is going to take over. And the sage on that was Richard Dawkins, who, as you know, the black hole theorist and so on. Pretty important. And my response to that was, yes, it might be, but maybe it might be the answer to global warming, because machines don't want to get drowned. And so maybe with artificial intelligence, they'll come up with a better solution than us. So artificial intelligence for the stock exchange, ESG, and predictions for the future. Sorry to be so short, Irene, but I did respect what you asked.
John?
Jeff, do you want me to go first?
Yes.
Sure.
Yeah, yeah, go ahead.
Thank you. I think the first question you asked me was how I choose investments, and I thought on that, and probably for losing 30%, you're probably doing better than most people. So don't feel too bad. Don't feel too bad. I always say that for me, investments, especially on the stock exchange, should be chosen on the basis of sustainability. And by sustainability, I mean, even if I don't mean sustainability in the sense of ESG, but in the sense of really long-term investment. And what then do I look at? I look at governance, I look at size of the company, safety, as I talked about before. I look at what matters to them as far as society is concerned, which is part of that sustainability ESG point. Those are the things I look at, because my reasoning is very simple. We're a developing world. Being a developing world means we will grow to be a developed world. So it's to look at those companies that will be there when that happens. And if they'll be there, if Kenya is going to be developing, then those companies must also develop in the process, yeah? In America, GE was a small company many, many years ago, I'm sure. So you develop with the economy. So on ESG, I would say that's something we care greatly about, Michael, for many reasons. Let me start by saying, as KB, a Kenyan Bankers Association, In the last, I think, 4 years ago, we developed what you call sustainable finance initiatives. And we had all banks sign up to it. And that spoke a lot to ESG. And our view was really simple, that you cannot finance to destroy the environment where your own employees, your own customers, and everybody else is in. That, you know, we operate because of society giving us a license to operate. And so those sustainable finance initiatives spoke to that if you're going to finance any industry, you rank them on an ESG spectrum. And there were places we should not go. For us as NCBA, we had an additional condition in the sense that as NIC, we had taken money from the IFC. And as you may know, IFC is very big on ESG. So there are a lot of things that for every credit application we look at today, we must sign off and say it meets these requirements from an ESG perspective. So I just want to give you comfort that we do look at those items for sure. On AI, I think that was more for Jeff, but I would say I do hope that AI doesn't take the decide for us how much sun we should have, Michael. I do hope that whatever happens, machines will never take over from the humans, but humans will use machines for the betterment of other humans.